In this video we are going to take a look at a live short trade idea in the Euro 1 hour timeframe, but before we begin the analysis, leave your like and subscribe to the channel, and do not forget to activate the notifications by clicking on the little bell right next to the subscribe button after you clicked it. That's important if you want to receive notifications every time I upload a video to the channel. Without further ado, let's begin the analysis of this trade. To analyze this trade idea, I'm going to use elements of the fractal flow strategy, the market maker strategy, and also from the Newtonian trading strategy that is being produced at the moment. Hopefully you will be able to notice how all the elements from these three different perspectives come together perfectly like a symphony. The use of these three perspectives together enable you to have the greatest number of clues to form the contextual story between buyers and sellers, and also to have the most precise entry and exit points as you are about to see in this video. In the market vector between numbers 1 and 2 you can clearly see that price made a lower low than number 0. If you follow this channel, you already know that this is an indication of selling power, but it is only an indication. We have to take a deeper look at the nuances of price to see exactly what is going on behind the curtains. The creation of a lower low also creates a solid market structure around high number 1 because that was the origin of the market vector that broke low number 0. Observe that we are talking about the major flow in here. This is why it is important to keep track of the major and minor flows of the market. Notice how the minor flow in here seems to be confusing. When you have the counterpoint between the major and minor flows, you can put things in perspective much more easily. After low number 2, price starts to rise, giving an indication that it will hit the sell zone near the solid market structure marked around 1. Under normal conditions, price would reach the sell zone, then it would give us some sort of indication that sellers are indeed still holding that position, and then the market would start to go down. However, as price approaches the high number 1 level in the market vector between numbers 2 and 3, observe that price does not give any indication that it will slow down. In fact, it does exactly the opposite. Observe how price charges upwards in the area marked by the red rectangle. If you are familiar with the market maker method that we explore here, you already know that this charge up is the first leg of the tridimensional axis of market manipulation. That piece of information is absolutely critical to understand the rest of this market and also this trade. When retail traders see the market charging up to a high like this, they enter a specific mindset that is predictable by market makers. As you know, retail traders usually do not get what they want, and market makers do, so we can infer the direction price from that idea in rough terms. If we know that retail traders are looking to go up, and we have indications that market makers are present in the market, we can infer that this market will indeed go down as market makers are always in the opposite end of the retail trader's position. In high number 3, we can see that price pierces the level of high number 1, but the first candle that does that ends up closing below the level of high number 1. The next two candles close a little above the level of high number 1, but they are in the shadow of that first upward piercing tail. Between numbers 3 and 4, we can see that price pierces that high number 1, and then it comes back down. One interesting and more advanced detail here is the way in which that happens. Notice the smoothness of the movement right before and right after the piercing. This is a classic signature of market makers. The smoothness and organization in the small highs and lows of candles are due to the systematic buying and selling to drive the market to certain points. This is analogous to market makers pushing retail traders off the cliff, but in a much subtler way, of course. In candle number 4 is where all the pieces of this puzzle start to come together and converge to a single point in this chart. It is also where we can find elements of the fractal flow strategy helping us identify the forces behind price and their intentions. Candle 4 is a fractal candle that happens to touch the horizontal wash line derived from high number 1 as well. That's a massive convergence between two modes of analyzing the market: the fractal flow and the market maker methods. By using these two methods, you could enter a short position at the opening of the next candle with a stop above high number 3. However, now I want to start introducing the new elements of the Newtonian trading strategy, which is based on the first principles of physics and cutting-edge technical analysis tools like frequency shifting and pitchforks. Observe that I have a pitchfork drawn in this chart using the market extremes 1, 2 and 3 as the fundamental axes. Pitchforks are tools that enable us to measure the potential energy of past price information and to extrapolate this into the immediate future. In other words, pitchforks use past price extremes to forecast future price extremes. I am oversimplifying this of course, but that's the major good thing about pitchforks. Needless to say, there are specific ways to draw these tools, and they will not work by themselves just like any other trading tool. I will go in great detail about the pitchfork and its auxiliary toolkit in the Newtonian trading strategy video course, but for now we should focus only on the main aspects of the idea. Observe that our pitchfork is pointing down. Observe also that high number 3 is the last axis of this pitchfork, and its line is also crossing the wash line and the fractal candle's tail more or less in the same area. That's a textbook indication that we are indeed in a market edge. Beyond that, the pitchfork and the axioms of the Newtonian perspective about the market can show us the most precise way of looking at this entry. By looking at the relationship between the tail of the fractal candle and the upper line of the pitchfork, we can see that there is a frequency shift going on in there, which is marked by the sliding line that follows the same angle as the pitchfork. The frequency shifting technique is the Everest of technical analysis. It's a combination of the laws of physics and one of the cognitive biases that are known to be counterproductive in the market, but that if placed in a different perspective can be of great use, as you are about to see. The trade you see opened in this video was triggered precisely at the moment where price touched the sliding line for the second time, which is marked by the second green arrow pointing down. Interestingly, this same candle is also a fractal candle, agreeing with the context we have so far. The stop-loss order for this trade comes from the market maker strategy, and it's placed above high number 3 because that's a safe place under the light of what market makers seem to be doing here. The exit point will be based on the Newtonian trading strategy just like the entry point was. We are going to use a dynamic target that follows the lower line of the pitchfork. The fundamental pillar of a dynamic target is that you will theoretically get rewarded proportionally to your time of exposure in the market. Let's see how this trade turns out, and then I will make the final comments about this market scenario. Here we can see that price did hit the lower line of the downward sloping pitchfork as it was expected. I want you to pay attention to the level of precision of the entry and exit points of this trade. You will notice that it is almost impossible to be more precise than this. Notice also how price comes back to the upper line of the pitchfork and starts to reverse again. This is the sort of precision you can expect when you combine advanced methods. If you enjoyed this video, don't forget to click the like button, subscribe to the channel, and leave your comment below. If you wish to learn how to trade like this, visit the strategy store or send me an email. Thank you for watching, and I hope to see you in the next videos.